Gold was down over 20 bucks on Thursday and ended up about 15 for the day. And today they're trying to rally, but the rallies are really weak. And if gold can't get through 1740, I don't think it's going anywhere. I think it's going to 1650, which is what I'm looking at.
It's great to have you. And now I wanted to discuss today, we are seeing a rally in the precious metals. We're recording this on Friday. Do you think this is going to continue? I know you actually put out a video recently, just today, and you were saying that actually you're still short paper, gold, and silver, and you're looking for them to fall lower. So your perspective on all that?
Well, I think they have a lot of room to go on the downside still, Elijah. And it's not that I'm against them. I mean, listen, it lets me buy more physical at cheaper prices, which I'm never going to sell. But I think that the paper gold, the charts look awful. The rallies are ridiculous. They make, bear market rallies look the best. And that's what I think we saw it on Thursday. Gold was down over 20 bucks on Thursday and ended up about 15 for the day. And today they're trying to rally, but the rallies are really weak. And if gold can't get through 1740, I don't think it's going anywhere. I think it's going to 1650, which is what I'm looking at. And I think silver is going to $18. And I think platinum's going lower. Now, platinum, we don't trade much platinum because it's not very liquid in the paper markets. But, I'm a buyer of platinum, especially at these prices. To me, it's a bargain for physical platinum. But, paper, these markets look pretty awful, and I would continue to look to sell them.
I know we've had you here in the past, and you said that the stock market has much further to fall for the long term. You said you're calling for about a 60% stock market crash. Do you see that precious metals will follow the stock market all the way down if we are going to continue to see selling pressure?
No, I think that at some point, the money will switch to gold. Remember, if we have X amount of dollars to trade, and that's really what you got, okay? And you're going to put your money will chase money. And as the equities start to fall, there will be a point where I think the money will start to go into, obviously bonds, US dollars, and of course, then I think the precious metals. I think we're getting closer to that stage, but we still have to, I think, make a bottom in the gold market or the precious metals markets. And we really haven't made a solid bottom. And the bottom is when you really see some panic. And the term that's used on the street is called capitulation. We have not seen a capitulation bottom yet. I think that's what we're waiting for, and that would be more the green light. Now, if you're a physical buyer, you buy anytime because, again, you're not worried about the day-to-day trade. And I think that's important to remember. What is your overall objective? If you're buying it and not planning on selling it tomorrow, then it doesn't matter. Buy it at any price because it will be higher at some point. But if you're looking to trade it, then you have to be very much more careful.
No, you say there has to be a point of capitulation. I have been hearing from a lot of guests we've had on that the sentiment right now is extremely low in precious metals, and it rivals what we saw during the beginning when we saw that crash during COVID, and also what we saw in 2008. So what signs are you seeing that actually are showing that capitulation has not occurred yet?
Well, I mean, first of all, volume is pathetic, right? And I'm not talking about just in the precious metals. I'm talking across the board. There's not a product that's really showing any realistic volume. And that shows an overall lack of participation in markets. I mean, from equities to gold to grains, to you name it, nothing is trading at normal volumes. And, maybe these are the new normals. But right now, to me, that's a sign that there's a drift. The markets will still drift in a direction, and typically equity markets will drift higher, which was really what we've seen. Other than today, Friday, which is what you said, we're doing this on Friday. But for the week, they've been running pretty good, and they're up pretty big for the week. And I think that commodities tend to drift lower, and gold is a hard asset commodity, and that is what you see when you have very light volume. And until the sellers finally come and flush them, which I don't think is anywhere near yet, because again, the slight volume, you can't get capitulation on light volume. It's got to come on heavy volume and heavy selling. When we get that would be a sign it's time to buy for a trade. In the meantime, it's always time for an investment.
And why is it right now we're seeing low volume? Is it just because it's the summer or something else?
Well, I think it's the summer. I think there's some concerns in the overall economy. I think that you're also seeing that, the average consumer, let's face it, the rich are rich and they invest all the time. But the middle class, which is getting tortured by these high oil prices, by inflation, they don't have the same flexibility. So they're not able to participate as much except within their 401ks. And we might see a lack of funding in some of the IRA program this year because, again, high inflation takes money right out of your pocket. It's known as taxation without representation.
It's a very good point there. It does take money right out of your pocket, and it seems like inflation keeps heading higher. We're looking at the Fed that, they might be even in talks to do a whole point rate hike. Your perspective on what the Fed is doing and also inflation right now?
Besides that, the Fed is ignorant and has no clue of how a market works. Other than that, I think they'll probably go a full point, which would obviously create more problems. What we don't seem to understand, and what our administration doesn't seem to understand, is they can solve all these problems in 5 minutes. Okay, sign a bill. Let's go back to drilling and fracking and shale producing, which does not change the carbon footprint in this country. Okay, we're still using more oil, which means that you're going to have that pollution from the oil you're using, whether you drill it here or you drill it in Saudi Arabia. So why not do it here so we can bring our prices back down to where they were, which is half of where they are now? And why not let Americans benefit from the jobs and from everybody else that comes part of it? And on top of it, we could actually help Germany and the UK with natural gas if we chose to do that. But of course, we don't choose to do that because we've got too many. The squad is too much of hatred of America, and President Biden doesn't know where he's at.
I think the high oil prices definitely have been hurting the middle class right now. What you're saying is that's definitely a major cause of inflation right now because energy really is everything. So what the Fed does in this case, is it really going to have any impact on the oil price?
It's going to hurt more than it's going to help. Okay, it's going to hurt everybody. It helps two groups. It helps the banks because it gives them a bigger spread for lending. Okay. And it helps calm the inflation, but we don't want to calm inflation because we have to manually walk it in. We want to calm inflation. Inflation is good if it's being for the right reasons, and the right reasons are production and people being able to buy things. Right now, everybody's struggling to buy anything, and we're coming into a season. We have a lousy, broken down supply chain, and you've got all of these issues that are in play that could be fixed. Listen, 80% of everything you do involves fossil fuels. All right. So if we don't produce it ourselves, which why we're not, I don't know. I mean, it really is kind of dumb when you think about it because it's a simple solution. And I always ask this question to my people: at what cost do you want to destroy the American economy? And apparently they don't care what the cost is. But Biden would rather take his 747 Air Force One to Saudi Arabia and beg for oil for them to produce it. Why do they want them to produce it? Why shouldn't we benefit? Why should Aramco benefit from it?
It is interesting that it seems like even the Fed now is saying, inflation is their number one priority. So it doesn't seem like the stock market or the economy is something that they're looking to protect at this moment.
No, I mean, again, listen. When they said transitory a year ago, we knew it was a bunch of garbage. Okay, you knew that they were wrong. It was obvious that the minute that President Biden took office, oil was going to $100 a barrel at least. Okay, because that was his policies and what he wanted. He wanted to give the power to everybody else. In fact, he's still shipping oil to China from our strategic reserve, which is, again, that's supposed to be for wartime. But yet you're draining the SPR to give oil to China? Does that make sense? That has never worked in history. It's been done many times. It fails every single time they try to do it. And it's not going to be any different this time. And again, the simple answer, and hopefully in November, when there's, I think it'll be a walkover, I think that we'll see some more bills that will actually force the ability to frack and shale produce. Because again, the carbon footprint doesn't change whether we're doing it here or they're doing it there.
No, a lot of our guests have pointed out that the issue of inflation, yes, is a lot to do with oil right now, but really the issue is more monetary, right? And it's bigger than any political party out there. Your perspective on that, can we really change the outlook for the US dollar and inflation just based on, what political party is in office?
I think you could, because again, the political party, the administration that's in office now, and the way it's situated, they won't relent on this green energy, climate change, which I don't believe in anyways. I think that's a bunch of BS to begin with. Okay, the world runs in cycles and has done so since its inception. If you go back and look at the Vostok Index, which shows you about every 80,000 years we go through the same cycle. So, what are you going to start doing? Stop having cows so that they can't, have gas and put it into the air? You're going to stop breathing because human beings pollute the air as much as anything else anyways by breathing. And if we keep increasing population, so we get into this battle that we have to get some hand or some power into that we can get back to the potential of fracking and shale producing, because that is the number one reason that inflation is so high, because it does add to the cost of every product that you use, especially when you go to the grocery store. Okay, I mean, I'm paying for bread. I'm paying 50% more for bread right now. And that doesn't count that, now that Ukraine's talking about releasing some wheat, we're still going to have a food shortage this year. There's not enough production. Okay, no matter whether Ukraine and Russia make a deal to let some go out or they don't, there's still going to be a food shortage. So even though the grains have been under some stress and pressure due to a lack of trading, they're still going to probably go a lot higher, which means that I would say in a year from now, you could be paying $10 for a loaf of bread. How's that going to look in your bank book?
I think not very good. So how do people prepare for this and invest, in this new environment we see of extremely high inflation?
No, I think investing has got to be something and money that you can afford to not have to get. In other words, you got to take only money that you can afford. If you're going to need money next week for your house or your car payment, you better not invest it, because you never want to have to be forced to sell something. Okay. I mean, I hedge everything that I have, but I'm in equities long. I'm long equities all the time. When they go up or when they go down, even when I told you they were going down 60%, which I still believe, I'm still long. I mean, I'm hedged against it. But even if I wasn't hedged, the history of the market tells me that it's going up an average of 8.5% to 10% year over year. And I don't put in money that I'm going to need for the car payment, this week. Okay, you can't play the market like that, because the market will always punish those who are trying to play with light dollars or thin dollars that they can't afford to be in with. And that's, it's like any other form of even gambling or gaming. If you're playing with money you can't afford and you're going to need it, you're never going to get out at the top. You're always going to be chasing the bottom, because when you want to sell, so is everybody else.